Hello, hello. Happy Friday Eve, everybody. How we doing on this fine October 26, 2023? Welcome to the Pre-Market Prep session. This is our daily session where we go over all the important news, notes, analysis, information, trade ideas that are key to making sure you can make it out of this week alive, right? Which is really the big focus during earnings weeks. We've got data coming out left and right. We've got the continuation of the selling that we talked about 2 weeks ago when we got that weekly shooting star off of long-term, weekly resistance on QQQ. We're seeing that being fulfilled now, right? So there's a lot that's going on this week, a lot that's in play. So make sure that you're tapped in with us so that you can navigate this minefield that is earnings season. Earnings season is always a crazy time. There's always a lot going on. So it's even more important to kind of take into account, okay, what's happening, what's this news we're getting, and what's going on right now. And that is en route also to you getting 1% better per day, which is all that we're trying to do. So whether you're watching live or via replay, make sure you throw that one in the chat signifying your intention to get 1% better, right? Put that out into the world, out into the environment. It respects that intention and brings about results. And without further ado, let's get into it so that we have plenty of time to go over trade analysis in the Facebook group. So we're going to start with our top news here. First off is tech power. So Tesla down, Netflix up, Google down, Microsoft up, Meta down. Traders are judging tech earnings season as a mixed bag of results, sending shares of each company in opposite directions after they report quarterly results. One more tech giant, Amazon, is set to report this afternoon to round out the week, but markets are still digesting the latest update from the firm once known as Facebook, which is weighing on tech shares in the broader market. Now on the move, Meta Platforms, ticker META, initially rose 4% in after-hours trading on Wednesday, with strong revenues, profits, and users all topping forecasts. So all the major metrics for Meta top forecasts, which is why it's so important that you understand if you play earnings, it is a crapshoot because you can beat on every single metric, but some small portion that investors care about a lot still overrides all of that, right? So that rising 4%, that bullish sentiment did not last long. Meta reversed course to fall nearly 4% by the end of its conference call, which made several references to greater uncertainty and volatility, especially with regard to the advertising market that still represents most of the company's revenue. Doubts over the macro landscape also led Meta to hold off on a 2024 revenue outlook, while its CapEx plans for the coming year increased meaningfully, as well as costs associated with infrastructure, payroll expenses, and AR/VR investments as it further scales the metaverse. Now, I often talk about this a lot, but in terms of earnings reports, it's kind of like the report card versus your outlook for the course or the class that you're taking, right? If you get a bad quarterly report card, but you expect the rest of the year to be good, you're going to pass the class, you're fine. Generally, your parents don't care, right? But if you get a good report card, you say, hey, I'm good this quarter, but we're really heating up. I have no idea what's going on. And by, the end of the year, I don't think I'm going to pass the course. They're not going to feel good about that news. It's the same thing with these companies. The earnings doesn't matter as much as the outlook moving forward. So if the outlook is murky, uncertain, that's, not a description that investors are fond of. So remember that the earnings results are but a small portion of what is important when it comes to these companies. It is the guidance, especially during times of uncertainty and recession, right? And recession talks and high inflation and high credit card defaults and auto loan defaults. What you want is certainty, and that's what these companies cannot offer you. And as a result, we're seeing negative repercussions. Quote, we recognize that we have very ambitious investments on the horizon, including over a long time horizon with our Reality Labs and Reality Labs work and newer equally ambitious investments. We've added in the generative AI roadmap more recently, CFO Susan Lee at Meta declared. Quote, and we recognize that we have to earn the ability to invest in all of those things by delivering consolidated operating income growth over time. So that's something we're very much focused on. Reality Labs, the AR/VR division of Meta, posted an operating loss of $3.7 billion with a B dollars in the last quarter and has lost $11.5 billion so far this year. Now, what to watch? The NASDAQ Composite Index fell into correction territory On Wednesday, following the latest tech earnings, Alphabet, whose ticker is GOOGL, plunged nearly 10% for its worst day since the start of the COVID pandemic in March of 2020, while the 10-year Treasury yield moving back to the 5% level didn't help the situation. The NASDAQ had a bumper year until the middle of the summer when the Fed began messaging that interest rates could stay higher for longer, but investors can still ring the register with a gain of 23% year to date. So that's very important. The NASDAQ has officially entered correction territory. We're 20% from the highs. It can happen just that quick, right? That's why you need to be prepared to take advantage of whatever movement we get and act accordingly, and why that weekly outlook is so important. We got on here and I discussed 2 weeks ago, right? That shooting star that we put in on QQQ, right? Caused all that selling that we got last week. Said, hey, even when we were above the opening of the previous week with the shooting star, hey, more than likely we're going to end this week lower, and this will be the beginning of more selling on QQQ. You can go long QQQ puts, right? A month out, 3 months out, we went a few weeks out, all of the above, right? And they will all more than likely hit for you. And so far, they have all hit for us with all those long puts continuing to still do great with the selling pressure we're seeing across markets, even through earnings season. So earnings season is really kind of a time where if you go into it with longs that are already in accordance with broader ranging sentiment, then you're fine, right? But you don't want to like typically go into earnings with like a lot of shorter term swings, because it's just things could be all over the place. So it's pretty much day trading or longer term swings that have time on them that you want to have during earnings, because overall the longer term sentiment is what's going to play out, right? More than likely, which is the selling. But short term, you can get a lot of fluctuation. So that's really an important nugget that you want to take into trading earnings season. You typically want to day trade, right? You could use a post earnings strategy like we do, or or day trade short term opportunities that you see, or you want to be involved in longer term contracts, right? Like the weeks going into earnings, what is the prevailing sentiment? It's bearish after we put in a weekly shooting star after rejecting weekly downtrend resistance on QQQ. Right. So it was bearish as of the past 2 to 3 weeks. So if you come through holding, puts that are a month out, 2 months out, you're good. Right. But the in between, the shorter swings are kind of what are a little bit more in danger. So in terms of economic news here, we got a new speaker. The odds of a government shutdown next month may be lower with the election of a new U.S. House Speaker Mike Johnson, which comes more than 3 weeks after the ouster of Rep. Kevin McCarthy. Kevin McCarthy, period. Johnson is expected to back a stopgap measure that funds the government at current levels till either January 15th or April 15th, while Congress works on reaching a consensus on 12 spending bills. Note that Johnson voted against the temporary bill that previously averted a shutdown. The, quote, shutdown risk is still probably 20 to 30%, but it's much less than it was a couple weeks ago, said Pangea policy founder Terry Haynes. Now, in terms of the automotive industry, tentative deal, important news here. It looks like the devastating auto strike may be nearing an end as Ford, ticker F, and the UAW union reached a tentative agreement to end a 6-week-long walkout. The deal includes a 25% general wage hike over 4 years and may become the template to resolve negotiations with other Detroit automakers, including General Motors, ticker GM, and Stellantis, ticker STLA. That was my big question, because Ford was only one of a number of different vehicle companies that was struggling with these strikes. So maybe the rest will follow suit. Maybe they need, even more than that. We'll see. The next step for the UAW National Ford Council leadership to meet, next step is for the UAW National and Ford Council leadership to meet on October 29th on whether to send it to members for final approval. Investing group leader David Alton Clark believes Ford is stuck in a lose-lose situation given the strike's impact on profit and rising costs if it agreed to UAW's unrealistic demands. So a lot of different vehicle companies are stuck between a rock and a hard place. You're seeing a lot of people struggle to pay back, their loans. They're falling out of being able to pay for them. You've got this UAW strike. You've got people overall spending less. So it's just a tough outlook right now for these auto companies. And you see that with Tesla, which is lowering the price of the models of its Teslas like each and every week. I think now you can get a Tesla for below $40K. So yeah, it's a hard knock life right now out there. Let me see. And good morning, by the way, everybody, for popping in after we got started. Good morning. Hope you had a great, restful, and restorative night and morning, and you're ready to get into things today. In terms of data news here, economic landing, driven by resilient consumer spending, the U.S. economy likely grew sharply during Q3, although economists suspect a slowdown ahead given higher for longer interest rates. U.S. gross domestic product, GDP, is expected to have risen 4.3% in Q3, more than double from the 2.1% pace seen in Q2. The sharp growth expectation was cemented by the latest retail sales report, which came in much stronger than expected, though upcoming risks include cooling consumer spending, a looming government shutdown, and ongoing geopolitical turmoil. While investors seem to be pricing in a soft landing, history is not on their side, cautioned investing group leader Fear and Greed Trader. So we got GDP data this morning. Let's check on that and see what we got going on. I could actually check on my phone as well. So let's maybe do that instead. Remember, going into the end of the week, we've got a lot more, a lot more news, a lot more data, a lot more things dropping. Let's see here. All right. So treasury yields, short-term interest rate, dollars. So we got jobless claims as well. So U.S. GDP actual 4.9% versus 2.1%. Previous estimated was 4.5. So we thought GDP was going to be up 4.5%. It was actually up almost 5%. That's quite bullish, right? And after some selling, we could definitely see a bounce based off that today. So make sure you have your pre-market low marked off, your pre-market high marked off, right? And if we get above that pre-market high, we can see continuation to the upside where calls can pay and the brief respite, that will come during this overall downtrend, right? But that's bullish news, quite bullish news, right? That wasn't a casual beat. You're beating by almost half a percentage point there on GDP. So that is quite good news. Jobless claims up 10K to 210K. Survey was 207K. That's also bullish. We had jobless claims worse than expected, right? Which means the Fed might back off of interest rates because they've got a dual mandate of maintaining full employment, right? And then also keeping inflation low. So if they have 210,000 jobless claims, which is more jobless claims than expected, that means that they might need to ease up off of interest rates and focus more on employment. So you have two bullish pieces of information coming in before market open this morning. That is very important, right? And even doubles down on the importance of tuning in for these sessions. So in terms of today's markets in Asia, Japan, we're down 2.1%. Hong Kong, we're down 0.2%. China up 0.5%. India down 1.4%. In Europe, the FTSE in London down 0.7%. Paris down 0.8%. Frankfurt down 1.5%. The Dow down 0.4%. S&P down 0.6%. NASDAQ down 0.9%. All this has changed as the data has come out. So honestly, it's kind of irrelevant. I'll skip over that now. We got GDP, Q3 data already. We went over that. Initial jobless claims, we went over that. Let's see, any other retail inventories, wholesale inventories. We got that already, pre-market. Pending home sales. We have a few things at 10, 10:30, but nothing super important, right? Nothing really important at all. So we'll finish up here with our rapid fire stock news rundown. Bill Ackman made $200 million from his bet against 30-year treasuries. Cruise losing its California license could have big ramifications. That's, Google's self-driving, kind of branch. Or was that GM? I've got to go back and double check, but we talked about this yesterday. Morgan Stanley, ticker MS veteran Ted Pick named as CEO successor. Honda, ticker HMC, calls off affordable EV development with GM. IBM gains after strong results, free cash flow outlook boost. Mattel slides as Barbie boom fails to meaningfully raise outlook. Tough Barbie world. Boeing, ticker BA, trades sideways as plane maker posts mixed results. There's been a lot of that as well. So watch out for that. If, stocks aren't disappointing on earnings, they're trading sideways. So, and that just IV crushes everyone. So again, earnings so risky. Please make sure that you're careful out here in these earning streets. Then Endeavor, ticker EDR, soars as Silver Lake weighs take private offer. UPS to buy reverse logistics from Happy Returns from PayPal. So UPS buying a reverse logistics firm. And then Rocket Lab, ticker RKLB, bags FAA authorization to resume launches. So that'll wrap us up, put a bow on it, and take us out today on this fine day of pre-market prepping. Let's make sure that we go in ready to execute today, ready to close the gap between who we are and who we're meant to be, right? And of course, get 1% better. So everybody, if you enjoyed this content, show love to the content being posted on Instagram, right? Show love to the YouTube videos being posted here. And let's go about executing, right? Let's execute, and make sure that we remain patient when necessary. But we've got a few pieces of bullish data coming out here, a big beat on GDP. We'll see if that doesn't cause any type of short-term bounce. Then, yeah, things are pretty screwed because that would be absolutely crazy if we got that data and still no positive movement. So, we might be able to watch calls out the gate depending on how we're moving here on QQQ and SPY. So make sure that you're aware of that. You come ready to rock and roll. And let's have a great day, everybody. Other than that, we got Q&A tonight. Tune into that. That's where the battles are won. And I'll see you back here tomorrow morning for our next pre-market prep and our last one of the week. Have a great one.